Welcome back. Well, our team is standing by to take you through the top stock list to watch out for this Friday morning. We're starting off on a bit of a cautious note overall on cues, but let's talk about individual stocks now. Hi, guys. Happy Friday to you. Vivek, I'm going to kick it off with you. BEL, how do the numbers look?
Well, good morning. Very strong set from Bharat Electronics. Historically, when you're comparing the Q1 results, margins are generally subdued, but this time around the company has managed to surprise even on the margins front. Now, talking about the results themselves, revenue largely in line with what analysts were anticipating. Margins beat both on the back of improved execution as well as low raw material, the expenses that actually aided the performance. New order wins that the company has declared has come in at a record high of 8,100 crore for Q1. Now, talking about the numbers themselves, revenues jumped higher by over 12.5%. EBITDA up almost 30%. We're talking about the core EBITDA, and margins improving by over 200 basis points. Profitability on the back of the improved execution jumped up almost 20%. Now, talking about the order backlog for the company at the end of Q1, 65,360 crore, which gives the company almost 3.7 times trailing 12 months order visibility, which is quite strong. Analysts do believe this is a significantly good set of numbers, and that's why we are going with a green on the stock.
Okay, thanks a lot for that, Vivek. Mangalam, tell us about ITC, the takeaways.
Well, the conference call was held yesterday post the announcement of the demerger intent, and the company didn't say anything that the street wasn't expecting them to say, because, as far as the questions on why they chose to own 40% of the hotel rather than a vertical split, they did say that it was for strategic reasons and to enjoy the synergies as well. The ROCE for the hotel business will, or rather the overall resultant business will increase by about 18 to 20 odd %, and the return on invested capital will increase in double digits as well. So that's a positive. At the same time, they answer the question, will other businesses be demerged? There is nothing on the table yet. ITC, the company, will charge a small royalty to the hotel business for usage of the brand ITC, and that will not be very significant. In fact, it will be in line with the industry standards, and the hotel business will have no debt on the books, and the growth strategy will continue to be asset right. All these things would make the ITC stock in the green today.
Okay. All right, got that. Mangalam, Indian hotels, just do tell us about those numbers as well.
Well, for Indian hotels, actually, the pace of growth is normalizing now, but it's not bad. 16% revenue growth is what the company has posted, but there has been a slight increase in their costs, as a result of which the margins have come in below what the street was anticipating. In fact, year on year, there's been a near 180 basis points reduction in EBITDA margin as well, but the net profit has been aided by lower finance costs as well as higher other income. Importantly, year on year, both occupancy and average room revenue have been increasing. Quarter on quarter, there has been a mild seasonal dip. I see some red on the stock largely because of higher other expenses, or rather higher operating expenses, and slight moderation in the hotel industry's earlier supernormal growth.
Okay, all right, got that. We'll watch out for this one too. Mangalam, thank you very much. In fact, we will be joined by Mr. Puneet Chhatwal, MD and CEO of Indian Hotels, at 10:15 today, so watch out for that conversation. Okay, on to Rima now. Rima, morning. You're watching out for a couple of stocks as well?
Yes, hi, good morning. So let me start with Indus Stars, where the key highlight is that the tower addition has been the strongest that we've seen since Indus and Infratel had merged. So this quarter, the tower additions are more than 5,400 towers on a quarter-on-quarter basis, which is significant when you compare it to FY23's tower additions of 7,500 thereabouts. So the tower addition is a key. Other than that, the numbers are pretty stable. There is a top-line growth of about 4.8% on a quarter-on-quarter basis. Margins have come down on a sequential basis, and that's because the allowance for doubtful receivables, doubtful provisions, as it's called, has gone up on a sequential basis. This is due to, receivables from Vodafone Idea. So that's gone up. But again, it's not an alarming number. The overall receivables from Vodafone Idea have remained stable, and this is something that the street likes. So I'm going to go with green for Indus Stars because, one, the tower addition is strong, and two, because the receivables from Vodafone Idea have been good. Sona BLW is another one that I'm looking at. Good numbers, 25% top line growth, strong margin expansion to more than 27%, driving a 48% jump in the company's profitability. The order book has expanded on a quarter-on-quarter basis. The only thing I'm going to be watching out for Sona BLW from here on is that the company has said the reduction of FAME2 subsidies has resulted in lower production by electric two-wheeler industry. And that's the reason why their BEV, the battery electric vehicle segment revenue, has only gone up by 13% on a year-on-year basis, lower than the company average. So this is a trend that we will watch going ahead. Back to you.
All right, Rima, thanks a lot for that. Well, let's hop across to Sonal. She's here to tell us about Macrotech Developers and Supreme Petro. Morning, Sonal.
Good morning, Nigel. Macrotech Developers, well, we already had the operational update where the company saw a 30% growth in its pre-sales to come at 3,350 crore rupees, and they have targeted pre-sales of 14,500 crore rupees. Now in their numbers, they speak about FY26 targets as well, where they are looking at pre-sales of around 22,500 crore rupees in the MMR region, 4,000 crore rupees in Pune, and 1,200 crore rupees in Bangalore itself. So it looks like they have tall targets going ahead as well. They also say new micro markets are scaling up, and 20 to 33% market share is what they have in the emerging micro markets, and that is one place they are focusing on as well. For Supreme Petrochem, it was a weak set, and the company saw a decline on a YY and on a quarter-on-quarter basis. Their margins almost halved on a quarter-on-quarter basis. The profits were down 57%, revenues also down 12%. Expect some red on that stock today.
Okay, well, thanks very much, Sonal, for that. The next one is Ajanta Pharma. I mean, you know, that's the one spot we will focus on a fair bit today. There was a big mover yesterday, but Ajanta Pharma for now. Ekta, good morning.
Thanks for that. Well, it is the margins which are back on track for Ajanta Pharma. So that's the key highlight, coming at 26.6% versus 23.3% year on year and versus estimates of 23%. Revenue growth of around 7% is largely in line with estimates. It is driven by India, which was up in double digits, up 14%. US did well, it was up 19%, so no problems coming in there. And the profitability has come in at around 208 crores, which is again better than expectations because of the better margins. They have also approved their first interim dividend ever because the company has turned 50 years old. It is a special dividend of around 25 rupees and a regular dividend of around 10 odd rupees. So overall, things looking good for Ajanta.
All right, Ekta, thanks a lot for that. Well, let's focus on JK Lakshmi Cement. Those numbers were disappointing. The volumes itself were a miss. We were working with a number of around 3 million tons. They came in at around 2.93 million tons. They were impacted by unseasonal rains as well as the cyclone that was there. It affected their sales in their key markets of Gujarat as well as Rajasthan. The revenues are in line. The problem was on the profitability. So clearly the lower cost haven't played out. Margins came at around 10.3%. We were working with a number of around 13%. And that's what led to the profit mix a miss as well. You had a couple of costs like transport and employee costs. Both of them were up by close to around 6%. And the company, well, they say that they're continuing with that vision of 30 million tons by 2030. So that one starts off in the red. The next one we're looking at is Shyam Metallics. Well, we know most steel companies on a sequential basis, they've seen compression in terms of their margins. But look at the EBITDA per ton, it's down by only around 100 rupees. And that's why we're going with green, because they made an effort to control cost despite prices being a little bit weakish. Remember, the promoter entity has 88% in the company. So now they've approved a fundraising plan of around 3,600 crores via equity instruments. So we'll keep an eye out on that. So maybe some mild green to kickstart trade.
Okay, so these are the other two we'll watch out for. Let's quickly recap the list then. Stocks that have positive news flow around them today are BEL, ITC, Indus Towers, Sona BLW, Macrotech Developers, Ajanta Pharma and Shyam Metallics. The ones that have negative connotations around them are Indian Hotels, Supreme Petrochem and JK Lakshmi Cement. All right, that's on the equity side. Let's find out what's the latest in the world of commodities. We have Manisha Gupta joining in for just that. Manisha, good morning and happy Friday to you.
Thank you, Survi, for that. Well, when it comes to commodities, we have seen a bit of a weakness coming on Friday, but on a week-on-week basis, we still are trading on a firmer note. I'll start with the crude oil prices, where we have seen 4 weeks of gains. This is going to be a 5th straight week. And for this week, we are up nearly 5% for the crude oil prices. Well, the strength in U.S. GDP at 2.4% has been supportive. So has been the fact that you have seen a stronger demand continuing from China. The OPEC and allies output cuts for this month and the next and for the quarter might give tightness to the market, and that clearly has been supportive as well. What we have seen in sense of damages, though, has been the metals as a sector. So whether it's precious metals, gold, silver, or metals like, copper, coal, iron ore, zinc, all of these metals are headed for a weekly decline right now. The Chinese demand more or less has remained muted, and the metals are facing resistance as there is some bit of a mine wrap copper as well coming in. So some inventory increase for copper, aluminum also seems to be weighing on right now.
Okay, well, Manisha, thanks very much for that. Commodities and metals in focus. Well, we'll take a very quick commercial break here. We have the management of LG Balakrishnan to joining us on the other side on their first quarter numbers. Deepan Mehta will also be joining in Felixer Equities to talk about specific stocks and results that have come out over the last 12 to 14 hours. Stay with us.